Is this the way the whole year is going to be? Down 2 days, up 2 days? Welcome to the Best of US Platinum Channel, Best of US Review, Weekly Review. Now we're going to get into a couple different elements about what's happening in markets. And partially we're going to talk with Kerry, listen to his take on what's happening. And he's going to review support and resistance levels that he's seen in the Bus 12 and Bus 13 stocks, along with Mark looking at the indexes, along with the watch list, and a couple of the different trades that were made this week. All of this points to support and resistance. And so we're going to get into that. So stay tuned. In this section, Kerry talks about this is not normal. Looking back at the Bus 12 and Bus 13 performance over the last 12 months and the returns that these stocks cranked out, a ridiculous return. The question is this sustainable and is this normal? So he gets into how he uses the cheat sheet and how he calculates, but he also looks at a couple different charts and what these stocks are doing. And should we take caution? Let's check out what Kerry has to say.
Okay, I wanted to start with NVIDIA. Started on the 5th of January. Modine is an air conditioning company. And it's puts air conditioners in data centers. Started on January the 5th. Marvel started on January the 5th. This is not normal to see stocks spike up like this. And then the one to kill all is super
Right there.
There it is. That's super macro computer. And I've been a big fan of super macro computers for about 6 months since I listened to their earnings call, maybe even further back. But that's not normal. It's not normal to say that a stock, because they said their earnings are going to be up about 20% more than what they thought they were going to be, that the stock is all of a sudden worth 36% more than it was yesterday. So I don't think that's normal. Okay. This is a change I've made to my cheat sheet. As I saw this, I said, it's great for you if you're in them. At the other time, you have to wonder, should I get out of them? So I went to my cheat sheet and I did something. I added this column over here, ACC, and it's 1 year return. And what that does is I've got a hidden column in here that basically takes what the price was, or I put a formula in there, what the price was 365 days ago. That then compares it to Apple's 191.56 that it is today. So it is up 46%, or 41.6% in the past year. And I did that on every one of the stocks in the Bus 12 and Bus 13 portfolios. And I did it to kind of give me a clue as to which of these stocks are maybe getting out of hand. I've coded the big five: Apple, Amazon, Google, Meta, and Microsoft, who I believe are part of both the Bus 12 and Bus 13. And you can see their gains over the last year are much less than some of the others that we see, such as NVIDIA's up 250-some%. Super macro is now up, where is it? 497%. So I said to myself, okay, what's the average of all of them over the last 365 days. Average, they're up 108.14%. So that says to me, you're picking the right stocks, and they're long-term investments, but you need to manage your risk.
In this portion, Kerry reviews a couple stocks using TradingView's charting system. And what you see is where the buys are and where the sells are, and where resistance is created because of limit orders on the sell side and limit orders on the buy side. So let's check out the charts.
This is a chart. I have added something that Trent just recently pointed out to me, and that's that bar right there. That literally scans the internet and says, where are the buy orders on Synopsys? And even though the price is currently at 518, the buy orders are down here at 450. And that's where you should be buying into this stock. Let's look at Tesla. It takes a little while for it to load. Actually, there are buy orders on Tesla at
Let me jump in here. I think the bigger focus is look at that big red stripe of red across the screen right there. And look at where, if you go back to, looks like September, it hit. You go back, it hit in the red there in October. It came back, it hit here at the first of the year. And each time it hits, it retreats. And so you're seeing a stacking of these red sell orders. So this is a calculation of where the limit orders to sell or to buy are stacking up. And as you can scroll down, like you're pointing out, Kerry, about to point out on the green, there's limit orders down there around that 160 range. And then again at 104. But
these are buy orders.
Right. And these will change day to day. So what I see, well, I'm sorry to interrupt. Go ahead.
So that's what I'm doing on a daily basis, is going through the BUS 12 and BUS 13 portfolios and seeing where these buy orders are. I believe, Trent, and you correct me if I'm wrong, in some cases, you can, like up here, I can see 683.69 million. Does that mean that there were that many sell orders registered on that at that time?
In that channel.
Yeah.
So going back to where it starts to the left, so that looks like in the end of October or middle October, right? Go back a little bit more, where you see the green little part right here where it says sell to. Go over to your right, to your right, to your right.
Okay.
Right here, across the band, that whole little channel, there's been about 6 million, whatever the number is, 633 million shares of volume during that period of time of sell orders. Okay. Does that make sense? So over a month to, what's that, 2 months, 3 months? That's how many people are putting in orders to sell at that price.
Okay. And then we come down here, and these are where they want to buy in, correct?
Correct.
At 105 and 157.
I look at those as like bait. That's where they're trying to pull the price down to. Does it mean they're going to buy there? If they can bring the price down to that range, maybe they do buy there, or maybe they just move that range, that bait further down. Does that make sense? So that's why it's very important not to like fixate and say this is only this, but this is a variable that changes on a minute by minute, day by day basis. You're looking at from a daily standpoint, but it gives you an idea where since August of this year where the sells have been in Tesla.
Okay.
Does that make sense?
Yeah.
So if you start in August and you put your cursor at the peak in August to the left, keep going in August here to the peak, go up,
Okay.
go up here. And if you drew a line hitting those peaks, you can tell where the next probability of sell orders will be. Does that make sense? So if you drew a diagonal line all the way down off those things, it'd probably come down to around 250 is where you'll see the next batch of sell orders. Each week on the Platinum Channel Swing Trading Call, Mark goes over the three indexes, the Dow Jones, the NASDAQ, and the S&P 500. And what he'll point out here is markets aren't really going all that far. They're sort of just zigzagging sideways. So let's have Mark talk a little bit about that.
So here's our S&P 500. Okay, this is on the SPY. You can trade the SPY. It's called the Spider S&P 500 ETF. You can trade this, and we can trade this, and we have traded this. What we see here is a consolidation period of all the way back to December 14th, where the market has just been trading sideways. And you think, by the way you see it go up and down, that we should be way up. But we're 1 month into a sideways trading pattern. You can see we've had sideways trading patterns before. It pops up. And now the market just seems to be waiting on something. You can see the Bollinger Bands, which are plus or minus 2 standard deviations from the mean, which is the 20 EMA, okay, are starting to narrow. And normally when we see a narrowing Bollinger Band, you either get a situation where the markets pop up or the markets pop down. But the market is just indecisive right now. We can back off a year and take a look at this. And here we are. Okay, so here's the market from a year ago. And we can see we had a nice sharp down. This is where we went up in the October period. We had that nice sharp up. Then we had a consolidation period, and now we're up again where we're banging right on the intermediate resistance level right here. And we've been doing that for a month. We'll go back down, get a little closer, and look at our oscillators. These are gaps. Gaps are when a market closes here and then it opens here and it leaves a gap. Gaps on indices usually get filled. And so at some point when this comes down, these gaps are going to get filled. As we go down and we look at the MACD, we can see the MACD is below the signal line, which is a bad thing for a technical trader. We see the slow stochastic is crossed over, the K line is crossed over the D line. And we're starting to see the RSI go down. So when you look at the big picture, we're stalled out, and we'll see what happens. We still have a rising 50-day and a rising 200-day moving average, but we're seeing the 9 has flattened out. These are the shorter term moving averages. The 20 has flattened out. It almost looks like the 20 is starting to roll over a bit here. Let's go look at the Dow Jones. And this is on the DIA, and this is a tradable ETF also. You can see the Bollinger Bands coming together. You can see since the same time, since the 14th of December, sideways trading pattern. We're seeing the short-term 9-day rolling over. We're seeing the 20 SMA roll over. We actually closed today below the 20 and yesterday in the 9. So 2 days under the 9, and then we've closed under the 20, which are, levels of basically support that we've gone through. And we hit right on the Bollinger Band right now. So this goes through the Bollinger Band. The next level of support is the 50 and then the 200, basically. So it looks like the Dow wants to go down. When we come down and look at the oscillators, you can see that the MACD has been below the signal line for a while and still moving down. You can see the slow stochastic also has crossed over the percent D line. And again, we're seeing the RSI momentum starting to slow down too on the Dow. Let's go take a look at what's happened over the last year. And you can see, we were going in an upward pattern, but slowly. And then we went through to October, and then we just skyrocketed up. And we've had periods of consolidation up, and here we are again. And now you can see the Bollinger Bands again are tightening. And when you see Bollinger Bands tighten, something happens. And this one time it popped up, and the Bollinger Bands tightened here, it went down. Okay, you just don't know. Here's another tightening up, another tightening here, up a little. So, that's what I'm saying is we're going sideways. Is it going to go up or down? It's still trading in a range. Looks like this one's heading down to me, but it could bounce because it's hitting right on the Bollinger, and it could bounce back up. We'll have to wait and see. And let's go look at the Qs. And this is the NASDAQ. So again, no, that shouldn't be that far out anyway. Consolidating since this December 14th, cruising just between the upper resistance level and the Bollinger Band. Bollinger Bands are tightening. We can see we've hit this resistance level and just can't get through it for almost a month now. Come down, tried to get under the 9. We closed above the 9 on the Qs. Come down, and we see in the MACD is below the signal line. And we're seeing also that the slow stochastic has crossed over in a negative way of the percent D line. So again, let's back it out a little bit, see what we're looking at. There's the year. Okay, we had a big kind of sideways consolidation right here, and that was between July and October. And then we had that October dive. Then we had the big rise up. This is when interest rates, were supposedly going to be being cut. And now we're up here. We're wondering, are interest rates going to be cut or not? I don't know. We'll find out.
If you're not a Platinum Channel member on Best of US Investors, we do have a special going where it's 3 months for half price. So check out below the link and the discount code to use. But what Mark's going to get into here is the watch list for the swing trading portion of the Platinum Channel. Now, he goes over a couple of the different trades along with breaking down a couple of the entry points and exit points on 2 of the trades that were put on the list this past week. So let's check it out.
So this is our Platinum Channel paper trade portfolio, and it's for educational purposes. And I will go through, and just what I showed you guys, I'll go through the markets, and I'll go through the segments and the sectors, and I'll filter through thousands of stocks every weekend and look for the ones that set up. And I come up with a pretty good sized list of several hundred, and then I break them down. And what'd you say, Paul? They didn't win the ones that don't make it didn't win their playoff games or their wild card games.
Wild card.
Yeah. So, and then I come up with a certain amount, and to this week's list came up, and we had, this is from last week. Okay. And we had 7 winners, 3 losers, but we came out ahead. This week we came out and we had 1, 2, 3, 4, 5, 6, 7 on it so far this week. When it's yellow, they're closed out. So 4 of them are closed out. The ones that are white are still open on a paper trade only. So we had AON. Okay, we're still in there. The date's in. This is the support level S1 and 2. So this first support level, the second support level. These are the levels on the bottom side of where price is that it normally, in a technical indicator, it will come down and bounce off that level, or if it goes through, it might go hit the second level. And here's our resistance 1 and 2. The first level of resistance, UBB, is the upper Bollinger Band. 200 is the 200-day simple moving average. So it's the same way. If you break through resistance, then you can see the next level. And then we put commentary in. Okay. So this week when we came, all these stocks that got put on were, we came off of a bad week, and everything that I had was basically try for a cost basis closer to support and get a better risk reward ratio. Okay. And then I went in like yesterday when it went down and hit where I would have got, I put the number right here, 3051, because normally when I put these on the list, I just put it on the list. This is the closing price of the day before I put it on the list. So now I came back and I actually showed you this week, because the markets were down in pre-market both days. And these stocks were good enough on the chart that it looked like you were going to get a better cost basis if you just set your buy limits lower, just above support. And that's basically what happened on most of these stocks. And you can see the ones we got out on. Tractor Supply was up 5.49 a share. Kimberly Clark, 37 cents a share. Clearwater Analytics, 25 cents a share. We're still in Arch Capital, are we? No, we're out. $1.52. So right now we only have one loser out of the seven, and we have 1, 2, 3, 4 still open. So this is AON that comes up for you guys. So the white line represents, this was the day I put it on the list. This was the price. You can see right here's the price. So this actually was the Friday was, or the Monday was, last Friday was the price here. Oops. Cancel. And you can see I have a little uptrend. And what happened here is we've come down. This is what we were talking about. We like to see this big dumpster fire over here. The 9 came back and caught up with it. We went sideways, and we started to see a close over the 9. I missed it. This is where I'd like to have gotten in. We're underneath the 200, but we will trade under the 200. You can make money under the 200. Came up, and what happened is it crossed over the 20, and that's where I said, okay, now I think it's good, and we're still in this trade, and it's still going up. You still have a good MACD. You have a little bit of a crossover here, but when you're at the 90 level, this could go flat for a long time and called embedded. And then we actually came up, and the RSI hit over 50, which is good. So the next level of resistance is this Bollinger Band, followed by these sell levels right here, and then the 50. So these are all resistance above. Below is support. So the support is basically the 20. And then we've got the 9. Okay. And then the intermediate support level down here. And if it goes that far, it would be Bollinger Band. So we're playing between the lines. We're playing between support and resistance. This one's still open, so it'll be open again tomorrow. So when I put it on the list, here was the price it was at when it closed at last Friday. So put it on the list, but I said on Tuesday, Paul was talking about it. I even put it on Discord. Hey, look, TSCO is down. What was it, 5% or something, Paul? And it was in pre-market, and I looked it up, and there was some concern about some of their products going, being delayed going through the Suez Canal. But as you looked at the story, they already had most of their spring stuff in. They weren't worried about it. And so I wrote back to Paul and I said, well, this would be a good time to probably get in at a better price level if this thing tanks down and stays down, in the market. And so what happened is the price action came down, and you can see here's an intermediate support level right here. Well, what we want to do is put in a buy limit order down here. This came in, hit below the intermediate support level, hit our buy signal. Okay, it was right here, hit our buy signal, and went back up, and it closed above where we had our original price. And then today you can see it popped up here, came all the way up and hit this area where sells are, and that's where we got out. So instead of profit from here to here, we actually went down and we got profit from this level down here at the support level all the way up to where the sells were. That ended up being $5.49 a share on this trade in 2 days, because we waited, let the market come down. Sometimes it won't come down and hit your level. And I think Margaret's talked about, she's missed it, and I think everyone's missed it. And that's okay. You miss it, you miss it. You go on and you live your life. But this one actually came down and hit. And remember, these last 2 days have been down days. But what I'm looking at is we've got a trend here, even in the down days. These guys get caught up. These good uptrending stocks get caught up in the market, noise. They came down, and then the good stocks, they come down, they hit their support, and back up they go, and off we go. Now, if we could break through that level where the sells are, then there's another level of resistance here. But I'm very conservative. We've got a Bollinger Band right here, and that's what we hit. It was a Bollinger Band when we got out, and we missed that. That's right. We hit the Bollinger Band, and so that's where we would have got out. So that was a pretty good trade.
In conclusion, Mark Carrie and I all believe we are very overextended in this market, in particular, the Magnificent Seven. And the question is, at what point and what will bring this market down? The Magnificent Seven represents a significant amount of market capitalization of both the NASDAQ 100 and the S&P 500. When one of them goes, chances are it's going to pull the indexes down along with those individual stocks, and it'll create a snowball effect. With economic conditions weakening and the overall landscape not looking so great, the question is, how do you risk manage this? And if you're not taking a proactive approach in answering that question, there's a good chance you could potentially lose a lot of money in the coming year. Now, as fast as markets go up, markets can go down even faster. And we've seen that over the last 23, 24 years. So the question is, how are you risk managing? Come check us out at bestofUSinvestors.com or our abbreviated URL, www.bus13.ai. That's www.bus13.ai. And check out what we're doing. Join our Discord. Get an idea of what we're thinking and how we're going about analyzing and positioning markets, and most importantly, teaching our participants and subscribers in how to manage risk and how to read markets better. So I look forward to hearing from you soon. Check out the discount coupon for the Platinum channel. It's a 90 days, 50% off the regular $60 price. This is a deal. We continuously add new content and new services to this. So take us up on it, check us out, give us a trial run, and join the tribe. Live loud.